All right, we're at the close of another trading day, so let's get you a breakdown of market activities today and, of course, insights into some of the events that are driving the market. This, of course, is Market Pulse on News Central in partnership with Nairametrics. Welcome. I am your host, Joanna Mustafa, and, of course, on the show today, is the income redistribution coming into play in Nigeria as President Tinubu seeks to tax banks' FX gains? That's a conversation that has been ongoing since yesterday evening, and we'll continue it here today. We're also getting into two particular stocks that we can't get our eyes off of on the NGX, so stick around for that conversation on Pulse of the Day and crypto exchange. OKX is set to discontinue its service in Nigeria. This is due to unfavorable policies. Could this be the first of many? And what does this spell out for the crypto ecosystem here in Nigeria? We'll get into all that and more, but let's kick things off with the NGX and what is happening on the markets today. Of course, markets are making a comeback from yesterday's dip, up almost 0.5%. All-share index 100,503.2, up 47%. This is the highest it has been since mid-April, so significant gains there. Let's come to the top gainers. I would say the usual suspects on the top gainers, UCAP, Oando. Noticeably absent is Cutix, right? They're breaking their run on the top gainers list, but it still gained almost 7%, specifically 6.95%. We're coming now to the losers list. And you know how they say gainers, today, losers tomorrow. Livestock feed, we know for a good part of last week was on the gaining list. Now it's on the losers list. I guess investors are taking profits, right, after pushing the price last week. Coming to top movers now, banking stocks, of course, are witnessing a decline in share price. Some are saying investors are reacting to news of taxation. We know that Zenith Bank specifically declined 7%. So all in all, there was that decline on the NGX, but this was, of course, hedged by gains from Airtel, which gained about 4.76%. It's not a top gainer, but we know that it's the second largest stock on the exchange. So when they sneeze, the market moves pretty much. So yes, a positive today on the NGX. Of course, we'll take a deeper breakdown on market activities as they come up just after the break. Tony Odutola, Deputy Head Investment Department, FCMB, will be joining me to assess today's markets. So stay with us. All right, you're tuned in to Market Pulse. Right now, we are picking up the pulse of the day with Tony Odutola. He is the Deputy Head Investment Department for FCMB. Thank you for joining me.
Thank you very much for having me, Joanna.
All right, it's a pleasure.
FCMB Kingston's, actually.
All right, we'll get that corrected, but it's a pleasure having you on. Let's get into the conversation and the pulse of the day. There have been a number of consistent top gainers on the NGX. United Capital is a consistent gainer on our radar. Just yesterday, it was up over 43.48% year to date. It didn't make the list today, but it did make the list as a top gainer, actually. There's usually a story behind growth in share price, but this particular stock seems to have beaten the understanding of several market analysts. Tony, what are the sentiments driving this bullish run?
Okay, thank you very much for having me. First and foremost, I wish to say that the opinions I'll be sharing will be mine and not of my employers. Just to put that straight. But I think that to your question, it's important to situate this side by side of the securities listed on the NGX. So the returns may not be entirely out of place. When we look at year-to-date returns, we've had stocks that have done higher than this as at this period. So with that said, I do not know what catalyst is driving this, but you can safely say probably you have particular investors who are desirous of consolidating their stakes in the company responsible for the renewed demand. And then, moreover, it's been a stock that is historical for paying dividends. So who knows? Probably there's an interim in the works.
Perhaps we'll see about that. But there's also conversation around the fact that the stock may be overvalued and investors are adopting or taking that short position on the stock. Are their sentiments misplaced, would you say?
Well, I would say that for every gainer, there will be a loser. And someone will have to be on the shorter end of the stick at every point in time, or what you call the greater fool's theory. Whether it is backed by fundamentals, technical analysis, or it's just pure sentiments, there will be price movement. So whichever one is at play at any given time determines the direction of the stock. So it may be difficult to say if sentiments are misplaced or otherwise, because it then depends on which of the sentiments is driving the stock. But from what we see, if the gains is not exactly market wide, then it's safe to say that there are, specific investors that have, interest that want to then consolidate.
All right, we'll see how this run goes. There's another stock that we can't keep our eyes off. It's the cable manufacturer, Cutix. Between June 12th and now, its share price has appreciated over 46%. There's a year-to-date return of 144%. However, looking at the historical antecedents to this stock, is there the possibility or probability that this is yet another bull trap?
Well, that's a serious allegation to make. I was looking through today, and it was interesting that number of trades on Cutix was over 450. That's quite high, and probably suggests that trades are broad-based. But of course, it doesn't tell if buyers or a buyer is concentrated or it's diverse. That information should help to tell more about the goings on around the stock. But like I mentioned earlier, when you don't have the market breadth making that quantum gain, then it speaks to specific interest around related parties or individuals who are interested in a particular stock. And it could be for anything. It could be for new takeovers. It could be for whatever it is. But it's difficult to say. However, if you don't have macro stories that point to this or news indicating that there's something going on, then it's probably safe to say that it may not be something that investors generally should run after, because at some point in time, this interest will wane.
All right. We'll see whether or not this is the end of the bull's run as regarding that stock. But yesterday, moving on from there, yesterday we had a conversation with Mukhtar Mohammed on the need for some sort of regulation when it comes to private investors buying out listed companies and then going ahead to delist the company. We know that right now, Oando PLC is set to delist from the JSE and the NGX. Earlier this year, there was a case filed against Oando PLC by minority shareholders. There's been a back and forth, and since then, and then just, I think it was yesterday or so, a federal high court has given its ruling. Can you, share with us or the viewers through some background on this case and perhaps what the verdict given yesterday could mean going forward?
Well, Oando's story has been a love-hate relationship with the market. There's been quite a lot of back and forth between management stroke core investor and minority shareholders as to how the company should then go forward. I think this started from the days of their purchase of ConocoPhillips, sometime in 2014, thereabout, and there's been all that back and forth. There's been resurgence with the new direction the company has come to share with the market in terms of how it then wants to play in the oil fields that has just been taken up. But over and beyond the one, I think we should. This delisting will mean that there will be opportunities or less alternatives for investors to be able to take in the market. But I think there are positive also in that subsector that we should look at. With say refinery, say they're coming to the market, and NPC is coming to the market. So maybe even if one do delist, there are other opportunities that we can focus on. But clearly, we entirely can't legislate for owners of businesses, whether to stay on the market or go. We should encourage them to stay because it then creates more like a commonwealth for everyone, for every investor to be able to take part of. But beyond that, there's probably not so much you can do. I mean, you can't force minority shareholders to sell their shares, meaning that even if you then go ahead and list, you still have them on your books and you still have to manage them. But in terms of optics, probably does not look too good because this has been protracted. It's stayed on for far too long, I think. So if we're talking about being open enough to be able to discuss what the issues are, one probably needs to do a bit more in managing those interests.
For them. Quickly, before we let you go, we know that the crypto ecosystem in Nigeria has come under heavy scrutiny and regulations. Regulations are being rolled out, right? And in reaction to that, OKX, a crypto exchange, is set to discontinue services here in Nigeria effective August 16, 2024. Could this be the first of many? What's your assessment of sex handling of the crypto space?
So I take a bit of a different view. I think that the crypto community needs to do a bit more in the sense that if you operate in the market where you are, talking to multitudes of people within a market, then you're probably going to be open to regulation of some sort. And what I expect that should happen is that players in that space we need to do a bit more of advocacy in letting the regulators know and the market itself understand their business. Because, for everything that you do not understand, you will be opposed to it, So they need to do a bit more in carrying regulators along to understanding their business. If truly there is, something positive to give to participants, I think that in itself helps to reduce the acrimony that you have. Because, I mean, not just in Nigeria, in other climes, you have this back and forth between crypto operators and the regulator of government. And I think if you're selling something and it's valuable, it's about bringing it to the table and they tell you what their fears are. You can allay those fears. You can, plug those holes wherever. And we should all have a win-win kind of situation because what the SEC is trying to prevent is a situation where either the country or citizens of the country would have losses, by virtue of this. So it's for the operators of that system to be able to come to the table and say, we hear you, we see what those fears are, and these are the things that we're doing to make sure that does not occur. I do not think that, it should be too much of a trouble.
So there's definitely the need for that dialogue between the regulated and the regulators. Thank you so much for joining us. Tony Odutola, Deputy Head Investments Department, FCMB. Thank you for joining us. Looking forward to having you in on the conversation some other time.
Thank you very much for having me.
You're watching Market Pulse. In the spotlight today, Nigeria's president has asked the Nigerian Senate to increase the 2024 budget by 6.2 trillion naira. 3.2 trillion of that amount is to go to infrastructure and the rest to recurrent expenditure. But how exactly is this to be funded? Well, it seems another tax is in the offering as 50% of banks' profits realized from foreign exchange devaluation is to go to the federal government. This is what is contained in the proposed amendment to the 2023 Finance Act, which was sent by the President to the Senate. David Olujimi, financial markets analyst with Nairametrics, is with me now to discuss. David, we talked about this a bit yesterday towards the end of the show as the news broke. Just how much profit from forex gains was recorded by the banks in the period under question, and how, or have you done the math with the 50% taxation on that figure?
So here's the thing about the law. The proposed amendment is a 50% windfall tax on realized FX gains. So now we have also come into a new subject, the subject of realized FX gains and unrealized FX gains. Now, according to Nairametrics data tracked about 3.37 trillion as FX gains recorded by banks in the financial year 2023. However, we have not been able to track, or this is another subject of intense accounting, to be able to track what are the realized FX gains and unrealized FX gains, due to the fact that some banks have long position on foreign currency denominated assets and liabilities. So we can't really say. Now we have come to a new subject that I believe that the accountants and the accounting heads in the government will do a lot of mathematics to get to.
Well, they're giving themselves that work. But aren't these gains
that job already?
Yes. Aren't these gains already subject to corporate taxation of 30%?
So that's one thing. That's one thing that I was discussing with I discussed with a friend today, and that is something that came up in the discussion. The place of company income tax, corporate capital gains tax. These taxes already exist. So there's going to be there's a probable subject of double taxation on the earnings recorded by these banks last year. And don't forget that the CBN released a memo to the banks last year. Don't use your FX gains for dividends payments. You are going to hedge these funds. However, there's a lot of back and forth and a lot of accounting nuances that go into place in these things. There'll be a lot of probably legal and, like I said before, accounting back and forth. So there's also that threat, the threat of double taxation on the earnings of these banks.
Yeah, and I'm sure the banks are putting their case together somewhat. Yeah. But what does this mean for the taxable income structure already in place? You're saying it's under question. It's not really a positive. It's not really a positive for the banks. However, it's not that much of a deal because it's a one-time thing. And basically, these banks, the windfall tax is a structure that is put in place by government to, I would say, is a wealth redistribution thing. It happens a lot in the UK and in the US when oil companies make a lot of money from sales of oil and gas. Maybe an event occurred during the course of the year and the oil prices of oil went up. They usually implement windfall tax to ensure that this the earnings from the hike in oil prices, it goes around. All right, we'll see how this all plays out eventually, right? But then there's an ongoing conversation across board. Is the federal government justified with this position, considering a good number of companies ran at a loss or did not realize as much profit, and so the federal government did not realize enough revenue from taxation? So does this look like a means to make up for that?
Yes, basically, it's a means to make up. Essentially, it came out with an amendment to the Finance Act of 2023, the act that backs up the budget. So basically, we see a situation where the government is trying. Nigeria has a revenue problem at the moment, and I feel like that's one of the ways they've looked up and down, and they've seen that okay, this is one means we can put in place. And another thing we should also know is that this is not a case of black and white. There's a lot of gray areas around this subject because last year Nigerian companies suffered a lot when it comes to FX revaluation. MTN recorded over 700 billion FX loss. PZ causing every manufacturing industry in Nigeria, even till Dangote Cement, Dangote Sugar, they all posted losses, but the banks posted tremendous profits.
Gains, right. So maybe they're trying to balance that out.
Probably.
Right, you know, we'll see it about that. But then the conversation, the banks right now, what does this spell out for them? Of course, they're already under pressure to raise capital to meet up with CBN's requirements on the bank's recapitalization. We saw them under pressure today on the NGX. So, I mean, what does this spell out for the banks pretty much?
So basically, it doesn't really affect much because, like I said in the beginning, like I said earlier, it doesn't really affect much because the recapitalization guideline given was raise only share capital and share premium. Basically, the CBN wants them to go and raise new funds. We are not recycling funds here. We are not saying bring us your retained earnings or bring us your different reserves. No. So basically, go and raise new tier 1 funds, new fresh money. Basically, go and bring in new money.
All right.
If you have your FX gains in your FX reserves, then that means it is just there. What the government is basically doing now is they are cutting 50% of it and saying we are taking that.
All right, new money. We'll see how, you know, that activity, goes on. Of course, that's something we're tracking here on Market Pulse. Thank you, David, for that breakdown. This story isn't yet over, right? And we'll keep you updated with all the developments as that comes out. There's a poll up. It's over to you, of course. Are you one of those making a case for the government that the banks only took advantage of the times and that the profit realized was not organic and the profit made off of the federal government's policy direction or redirection should be taxed, redistributed to the people, or you believe it's a win and that win should be left for the banks, right? If anyone should benefit, it should be the shareholders of the banks. What do you think? The poll is up. Let's get your pulse on this conversation on X at Nairametrics. Up next, we're heading to the African markets. Let's get into that. Of course, the market was largely bullish. If you look at, what happened in the markets, the bulls pretty much had the markets across board, all but the NSE, Nairobi Stock Exchange. We know that there have been protests, again, in Kenya, and perhaps that's what's affecting their stock exchange, the NSE. But across board, largely bullish, largely positive. We'll be tracking and seeing where the markets go with that and whether or not NSE picks up and confidence is reignited in Kenya's markets. And that's the show for today. How will the banks and other stakeholders receive the government's plan to tax 50% of the profits realized from foreign exchange devaluation? That's something we'll keep our eyes out for. And is OKX's move the genesis of an exodus of crypto exchange from the Nigerian space? We'll be tracking all this and more right here on Market Pulse. 4 p.m. every weekday. You do not want to miss it. We're going to leave you, right? That's our show today. Join me tomorrow. We're going to leave you with the international markets outside of Africa.